me begin with the cut in your guidance. You're now forecasting a mid-single-digit top-line revenue growth versus double-digit earlier, and you've spoken about reassessing certain non-core offerings. Can you explain this to us?
So, a couple of things as we look at the future. Look, we believe that AI is actually pivoting to EI, engineering intelligence, which is how we would like to be known as going forward. And we see an integration of physical, industrial, and digital AI coming together. So what we did over the last quarter was that we first did our own research. We talked to our clients. We actually hosted them at MIT Labs for a customer event. We spent time with them with the advisory council, and we took them through our offerings for the future. We realized that if you look at mobility offerings, they are bang on. Software-defined vehicles, we continue to work on those. And in fact, happy to share that we've now been able to get up to being top two in that space. Also, our offerings in sustainability are bang on. We are able to actually make a lot of progress, close deals, create value for our customers, unlock value for ourselves, and expand on. In the tech space, because it's a very fast evolving space, there were certain areas in certain geographies that we believe were going to get commoditized, were getting commoditized, and we were losing our differentiation because everybody was doing sort of the same thing. So we went back to our board, took their approval, and we have therefore decided to pivot on margins. So margins came in about 200 basis points up, gross margins. All the three segments improved in EBITDA margins, and that's early success that you've seen. And as we go forward, we are looking at some of the others as well. By the time we end the year, we want to be fit and ready for our next scale up that starts on April 1st, 2026, going up to March 31st, 2031.
Amit, what was the loss in revenue in Q3 on account of this business recalibration, exiting or deprioritizing certain markets in high tech? And was it entirely in high tech?
It's entirely mostly in high tech. There was a little bit in mobility as well, but largely in high tech, Rima. That's number one. Number two, if you look at it, we will still grow double digit, right? In terms of constant currency, because we are on path and on track. We've had the right wins. We've had the right tailwinds to be able to get to that. We've said that, mid-single digits, so you can do the math and see as to what that number is. But that's broadly what we're looking at as a hit for the current year as we rationalize the portfolio and we look at margin improvement and expansion in an accelerated manner.
Amit, so FY26 guidance, is it double digit or is it mid-single digit?
First of all, we don't give guidance anymore. We only provide a reference. And what we're providing as a reference to you is that if I was to take into account the portfolio that we have decided to drop and would not have dropped it, we would have ended up double digit. But because we have decided to drop it, we will end up mid-single digits.
Okay. So Q3 was impacted on the back of this business recalibration. Will there be a loss in revenue in Q4 too?
No, I don't think so. We'll be fairly at this level as we look at quarter four. And quarter four is to be played out.
Got that. What happens to your earlier aspiration, $2 billion in terms of top line, medium term, mid-16, 16.5% kind of EBIT margins? How does that change? And what are the new timelines?
Sure. So number one, our aspiration to get to mid-16% EBIT margin stays. In fact, if you remember, we had talked about that we'll get to it in Q4 or Q4 of FY27 or Q1, Q2 of FY28. I'm now confirming that EBIT margins of 16.5, aspiration to get there by quarter four, FY27 is where we will be. So it'll be faster than what we had thought about earlier, number one. Number two, with regards to the 2 billion, you will have to give us a little time because we are looking at our 5-year trajectory, organic and inorganic, and we will come back to you and update you on the new number that we're going to look at as we look ahead.
Got that. So now your current margins are 14.5%. The aspiration is to get to mid 16.5% kind of margins by Q4 FY27. What are the levers to expand margins?
Yes. So couple three things. Number one is that we can improve offshoring by about 4 to 5%. That window we have. Our utilization currently hovers at about that 83% mark. With AI that we have leveraged in the company, I believe we can comfortably improve utilization by another 200 bips. So we've got that play at hand. And third, there are parts of the portfolio that we have executed projects on in Q3 that we may potentially not do in Q4, but we have growth coming from sustainability, mobility, and the ongoing part of the tech business that should help us to make those bold decisions and take it forward.
Got that. Just one final question, and getting back to this entire business recalibration. What exactly is happening in the tech world? You spoke about how parts of the tech business are getting commoditized, and that is driving you to deprioritize part of this business. So what exactly is happening? And if you could explain that in simple terms.
Number one, if I can start by saying we are deprioritizing tech areas in Europe, tech areas in the Indian market. We are not deprioritizing tech areas in the US market. Number two, if I break up the tech market for you, there are investments in data centers that are happening at this stage. Number two, and second, related to that, there is spend in energy. So what does that mean? So you've got the hyperscalers spending, you got people like who are the telco infra as well as the computer server people spending. You've got silicon vendors, semicon vendors spending. You've also got parts of the industrial segment, which is sustainability for us, spending because they are building out the data centers and the equipment for that and the racks and others. So there are so four of our segments or two of our segments, which is sustainability and tech, both are seeing an influx of spend coming in the tech because of the build out in AI and data centers. So it's a positive impact for us. So what we have done is, Nima, we have prioritized. So we have taken areas which kind of will become commoditized in the next 9 to 12 months. And we have taken those and we have decided to not work on those in the current, starting the current quarter. And what that means, therefore, is that as we move forward, you will see the margins improve, you will get us fit. So as the spend continues to increase, you will start seeing the growth along with the margins as you move forward.
All right, Amit, considering there is an acquisition which is contributing to the top line this year. Now, based on the reduced guidance, is FY26 organic? Would it be negative?
No, it won't, because like I said, there are areas that we are letting go, areas that we are bringing in, so hard to peel all that. I can tell you that we'll have a couple of 50 million plus accounts. One actually is already a 50 million ARR account for 3 quarters. Others are expanding rapidly. There are some good empanelments that we've got. So it's giving us, look, it happens once in a lifetime. You get this opportunity to be able to shuffle things in and out. Now, it does show up every quarter. That is true. But, we have to be strategic about this as we move forward. And you're seeing an impact of early execution results and margins, and you will see that as you go forward.
Amit, one final question. You will be setting phase 2 of your 5-year Lakshya plan from 1st April 2026, which goes on till March 2031. We'll get to the details as and when you lay it out, maybe in Q4. But could you give us a directional sense what the 5-year aspiration and goal is?
Aspiration is definitely to double, right? Definitely. But can we do more, right? That's the question. Are there tailwinds coming in from AI that we can harness? Are there tailwinds coming in from the data center part that we can harness? We've built 260 plus patents in AI. Could we monetize those? So a lot of those soul-searching questions going on as we speak right now. Early stage execution already on play. We go to the board again in March, get a formal sign-off on the 5-year track. So I guess when we see you in April, we will provide you that clarity as we move forward. But definitely, we would like to continue to grow and grow responsibly and profitably.
Thank you very much for that. For now, LTTS is down 4%. And on the other side of the spectrum is Infosys, which is up 4.5%. Get into a break. On the other side, Vishal Goyal, India Financials Analyst at UBS, will join in to talk about the key expectation from the banking sector in Q3.